The markets have been setting new all-time highs this week, yet the mood? Strangely quiet. There's not much celebration happening, especially among big money players. Most institutional investors remain cautious about this rally, largely due to unresolved issues like the FOMC decisions and upcoming tariff deadlines. But here's what matters. Markets don't usually top out when people are still skeptical. They top when people are overly confident, euphoric even. And right now, that euphoria is completely missing. Yes, the Fed is holding steady on rates for the time being. But make no mistake, once inflation data cools enough to give them confidence, the Fed will start cutting. And that shift in stance would unleash more central bank liquidity into the system. When that happens, it tends to light a fire under financials, small caps, and especially the crypto market. Crypto is highly reactive to monetary policy changes. That's why we're seeing both stock and crypto markets smashing through previous records. And yet the crowd isn't cheering. Why? Well, many expected deeper rate cuts by now, more liquidity, and of course, a crazier altcoin season. That liquidity narrative is crucial for assets like XRP. Lower rates could mean massive inflows of capital, potentially sending XRP to completely new heights. And that's exactly what many in the XRP community are waiting for. A full-blown liquidity-driven explosion. So in today's episode on Crypto Labs News, we're diving deep into the real mechanics behind this, the hidden signals about when the Fed could pivot, and why this matters more than ever if you're trying to time the crypto market. Now let's listen to Toby. This rally is probably the most hated V-shaped recovery we've seen. And that's true. Despite new highs, sentiment remains cautious. Investors are still obsessing over risks like the Fed and tariffs. But as we know, pessimism doesn't usually mark a market top. It's when people stop questioning the risks that we typically reach a peak. Back in April, there was panic over what would happen without a trade deal. Many predicted disaster. But that disaster never came. And now, there's a realization setting in. Maybe things aren't great, but they're not falling apart either. Delays, diplomacy, they can all soften the blow. Don't forget, there's still $7 trillion in cash just sitting on the sidelines. Retail investors may be cautiously bullish, think the Robinhood crowd, but traditional high-net-worth investors remain conservative. And that's the majority of institutional money. High beta ETFs are making new records, sure, but we're not in full speculation mode yet. In fact, some are arguing there's more speculative fear than speculative greed. Right now, especially the belief that inflation will reignite or that we're already in a recession. That's a speculative bubble in negativity that we saw a similar wave of pessimism after the 2008 crash. For a decade, people expected another collapse that never came. And now, the market has PTSD, scared of the Fed, scared of trade wars, scared of everything. Worse, the truth. If the Fed eases up and begins cutting rates, it's going to create massive liquidity again. That directly benefits banks, small caps, regional lenders, and of course, cryptocurrencies. Financial stocks have rebounded, but they're still not overvalued. Once rates fall, credit becomes cheaper, mortgage demand rises, and the credit cycle expands. That's the kind of backdrop where crypto really thrives. Let's talk housing for a moment. We formed 15 million households in the past decade, but only built 13 million homes. With interest rates still high, that supply gap is fueling housing inflation, and it's not sustainable. That pressure has to break. And here's another thing. With inflation running below 2% and the Fed still holding at 4.5%, the real interest rate is far too high. That hurts everyday consumers and businesses. Plus, we're still dragging along with tariff taxes that act like a financial anchor on the economy. Tom Lee nails it. It's counterintuitive for the Fed to stay hawkish when $400 billion in tariffs are acting like a tax. Eventually, they'll be forced to pivot, and when they do, it opens the floodgates. That's when the opportunity in crypto becomes massive. If the Fed refuses to lower rates, the U.S. economy will be pushed to the brink. We're talking about a full-blown squeeze on small businesses, medium-sized companies, and real estate markets, all highly leveraged and sensitive to interest costs. If the Fed doesn't act in time, there's a real risk of a major downturn. But that's not all bad news. In fact, those moments of panic often lead to some of the best opportunities in crypto. Historically, market panics are followed by sharp, V-shaped rebounds. We've seen this movie before, a crash followed by an incredible rally. If you're positioned right, like getting into XRP, Bitcoin, or Solana near the bottom, you've already made strong returns. That's the mindset we need to adopt. If the Fed stays tight and markets crash, buy the dip. If the Fed loosens and liquidity floods in, ride the wave. Either way, smart investors are always prepared with a plan. And that's what we do right here on Crypto Labs News. And if you want to know exactly what trades I'm making in real time, you can join our Crypto Labs circle today, absolutely free. Here's how. 1. Sign up on one of our partner exchanges. Point 2. Make a deposit. Point 3. Submit your email and user ID. That's it. No strings attached. You'll get access to my trades, analysis, market plans, everything I'm doing. And if you're using my links for BTCC or Bitex, you'll unlock awesome bonuses. BTCC gives you a 10% deposit bonus. Bitex is offering up to $8,000 just for trading and depositing. That's real value. No subscriptions, no monthly fees, just pure crypto strategy. Click the links below and join the Crypto Labs News Army.